How much can you sell in company stock during a gap year and pay 0% capital gains tax? What if I told you it's over $130,000 for a married couple? Or that if you live in California, New York, or Washington, you just got an $8,000 to $9,000 tax break you might not even know about. If you don't know these numbers, you're possibly leaving tens of thousands of dollars on the table. Hi, I'm Jonathan Nager with Alpine Road Financial, and today I'm going to walk you through the 2026 tax numbers that actually matter for tech workers with equity comp. Not every number, just the ones that can save you serious money. Let's get started. All right, the biggest change for 2026 that almost nobody's talking about is the SALT cap. And it just quadrupled. State and local tax deductions used to be capped at $10,000. Now, they're up to $40,400 if you're married filing jointly and making under $605,000. Here's why this is massive. You're making $250K of base plus $100K in RSUs in California. You're paying maybe $30,000 to $35,000 between state income tax and property tax. The old law, you can only deduct $10,000 of that. The other $25,000 just evaporated in thin air. The new law, you deduct the entire $35,000. That's an extra $25,000 in deductions, which puts about $8,000 to $9,000 back in your pocket in federal tax savings. If you live in high tax states, California, New York, New Jersey, Washington, this is the single biggest tax win in the last decade. Here's the thing though, with this new higher SALT cap, way more tech workers are going to be itemizing instead of taking the standard deduction, which means you're going to need to actually track your property tax, your state income tax, your charitable deductions. So let's do quick hits on the numbers that you actually need to know and change. Tax brackets got a little bit bigger. I'm not going to read every bracket line by line because that's just simply boring. Just know you have a bit more room before you get bumped up. The standard deduction also went up to $32,200 if you're married. Now, most tech workers making $250,000 plus in high states are going to itemize because of that big SALT cap increase. But if you're in a low tax state like Texas or Florida, you're probably still taking that standard deduction. And hey, it went up a bit. Retirement limits, which are your 401k max, now being $24,500 for 2026. And if you're 50 or older, it's $32,500. And here's something new. If you're between 60 and 63, you get a super catch up. You can put in $35,750 total. IRA limits is $7,500. Now here's the thing about Roth IRAs. If you make over $153,000 single or $252,000 married, you can't contribute directly to a Roth. You're completely phased out based on income. But here's the workaround, and this is critical for tech workers. It's the Backdoor Roth. You can contribute $7,500 to a traditional IRA. Anyone can do this. There are no income limits. Then you immediately convert it to a Roth. It's 100% legal. The IRS knows about it, and it's how high earners get money into Roth IRAs. Do not skip it. Now, let's talk about the HSA. It's $4,400 individual, $8,750 for family. Free money if you got a high deductible health plan. Here's another big one. This is where tech workers with company stock can save massive money. In fact, 0% capital gains brackets exist. If you're single, you can realize up to $49,450 in gains and pay zero federal tax. Married, up to $98,900 in gains. Now add in the standard deduction if you're taking it, $32,200 for married, and you're looking at over $131,000 in total income while paying zero federal tax on your gains. Let me show you what this looks like in real life quickly. You take a sabbatical at 45. No W-2 income that year. You need about $100,000 to live on. You sell $100,000 of your Apple stock that you bought 10 years ago. That's $90,000 in capital gains. For married couples, $90,000 in gains is under that $98,900 threshold. Federal tax, $0 if you're planning early retirement or a gap year or take off times before jobs. Time your stock sales, during those low-income years. 1 year of strategic planning can save you $15,000 to $30,000 in capital gains taxes. All right, a couple other numbers worth knowing. Let's jump to page 2 quickly just to look at Social Security. The Social Security wage base is $184,500. Once you earn above $184,500 a year, you stop paying the 6.2% Social Security tax. So if you're making $300,000, sometime mid-year, you're going to notice your paycheck just got 6.2% bigger. That's not a raise. That's you hitting the Social Security cap. Well, congrats. You just gave yourself a potential mid-year bonus. All right, back to page 1 for some estate and gift tax. You can gift $19,000 per person per year. Married couples with 2 kids, that's $76,000 per year you can transfer to your kids tax-free. If you have the intent, start early and you can move some serious wealth out of your estate while you're still alive. And finally, if you're exercising ISOs, the AMT exemption is $90,100 for single, $140,200 for married. Here's the deal. If you exercise ISOs, you need to model your AMT exposure before you pull that trigger. One mistake here, and you may be writing a check to the IRS that you just didn't see coming. In closing, bottom line, these aren't just numbers on a screen. They're levers you can pull to cut your tax bill and build wealth faster. I've put together the full 2026 important numbers guide. Email me at jonathan@alpineroadfinancial.com with the subject 2026 numbers, and I'll send it over for free. Your equity should fund freedom, not confusion. Hit subscribe, and I'll see you in the next video.